Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Gas Hold interim report. China Gas Holdings Limited offers a diverse range of businesses and services across the energy sector. The company's primary operations include energy supply, delivering natural gas and LPG to residential, industrial, and commercial users, pipeline construction and operation, investing in, constructing, and operating city and town gas pipelines, gas terminals, storage and transportation facilities, and gas logistics systems fueling stations. Building and operating compressed natural gas/liquefied natural gas fueling stations for vehicles' petrochemical investments. Investing in petrochemical facilities of storage and transportation, CBM business. Exploration and production of coal bed methane gas station administration services, providing management, consultancy, and procurement services for gas stations. In addition to these core operations, the company also offers wholesale and retail of household equipment and appliances, clean energy development and investment, natural gas and liquefied natural gas trading, electricity sales, construction services, rental and inspection services for safety, production software development, and consulting, securities investment. Overall, China Gas Holdings Limited is a comprehensive energy supplier and service provider with a wide range of businesses across the sector. The China Gas Holdings stock price surge, a year of strategic advancements over the past year. China Gas Holdings, HKG 384, has seen its stock price increase by approximately 20.28% to 24.77%, with a share price movement from HK $6.19 to HK $85 within a 52-week range. Several strategic initiatives and business developments have contributed to this positive performance. The company's focus on digital transformation, integrated energy business, and LNG supply agreements has boosted investor confidence in its future growth and efficiency. The announcement of long-term agreements with Beijing gas groups for stable LNG slots and the establishment of a trading house in Singapore demonstrate a commitment to securing supply and expanding market reach. Additionally, China Gas Holdings' consistent dividend payouts and renewal of share repurchase mandates have been viewed favorably by investors. These strategic advancements and commitment to shareholder returns appear to be key drivers in the stock's positive performance over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. Sales of natural gas increased by plus 4.3%. Value-added services increased by plus 0.6%. External segment revenue increased by HK $20.38 billion. Engineering, design, and construction revenue from joint ventures and associates increased by HK $21,662,000. Revenue decline. LPG sales revenue decreased by 12.2% due to a decrease in LPG sales volume, 4.5%, decrease in domestic natural gas demand, with China's apparent natural gas consumption decreasing by 0.2%. The growth in natural gas sales and value-added services contributed significantly to the revenue increase, while the decline in LPG sales and domestic natural gas demand led to a decrease in revenue. Net income and profit margins. A tale of inconsistency. The company's net income experienced a significant fluctuation over the observed period. Initially, it increased by 125.6% year-on-year, indicating a substantial growth in earnings. However, this trend was short-lived, as net income decreased by 24.2% later on. Profit margins also underwent changes, albeit less dramatic. The company's profit margin initially decreased due to declines in LPG sales revenue and volume. This decline continued until it reached 16%, a decrease from its previous level of 16.7%. However, the introduction of cost reviews and a price pass-through mechanism led to an increase in profit margins. The inconsistency in net income and profit margin changes suggests that the company's financial performance was affected by various factors across different periods. The company is indeed generating positive operating cash flow. This is evident from the financial summary and various points throughout the report. The net cash from operating activities on page 12 shows a positive figure of HK $3,127,333, indicating that the company's operations are generating sufficient cash to cover its expenses. Similarly, the operating cash flow on page 17 is also positive at HK $34,481,081. Furthermore, page 24 explicitly states positive operating cash flow. Yes, and page 46 confirms a net operating cash flow of HK $3,127,333,000. These indicators collectively demonstrate that the company's operations are generating sufficient cash to sustain its business activities. The company's debt level has experienced mixed changes over the past year. While total debt decreased from HK $62,868,140,000 to an unspecified amount, bank and other borrowings saw a significant increase of $688,688,535,000. Non-current liabilities also rose by $709,388. Interest expenses have shown a slight decrease overall, with a reduction of HK $5,395, 0.6%, from HK $128,740 to HK $123,345. However, interest on bank and other borrowings decreased by $92,623, 8.2%, while interest on lease liabilities increased by HK $502, 12.3%. The company's financial performance reveals a mixed picture across different business segments. On the positive side, engineering design and construction, as well as sales of natural gas installation, have shown significant growth, with revenue increasing from HK $1,570,217 to HK $3,335,525 in just one page. Other businesses also demonstrated improvement, with revenue rising from HK $149,645 to HK $556,870. However, some segments struggled. Sales of LPG experienced a decline, with revenue plummeting from HK $4,542 to HK $1,013. The value-added services segment also underperformed, recording a loss of HK $136,976 on the second page. These results indicate that while certain areas are thriving, others require attention and improvement. Management's outlook and strategy. The company has established a strong financial foundation through long-term partnerships with major banks in China and abroad. This has enabled the company to maintain a stable financial position and secure comprehensive financial services. In terms of investment approach, management has adopted a prudent strategy, prioritizing efficient management of cash flows and stable investments. The company aims to establish an integrated ecosystem for comprehensive integrated energy solutions by closely monitoring industry policies and technological models. Management will dynamically evaluate development potential in the LPG smart microgrid business and amend unutilized proceeds to support integrated energy businesses. This indicates a focus on strategic growth and adaptation to changing market conditions. That concludes the financial summary for China Gas Hold. Feel free to comment below, and I will be happy to answer them when possible.